Hi ladies and gentlemen, this is Game of Trades, and this is going to be a technical analysis of the S&P 500. We are witnessing something truly historic. We are seeing a drop in prices in the S&P 500 that makes the 2008 crash not look so bad. To put this into perspective, I'm going to make my dead money analogy, and that is that everyone that invested into the S&P 500 since July 2017 all the way till here have lost money and could potentially lose much more. Now, don't get me wrong, this is a wonderful time to be in the markets. I assure you we will have golden opportunities to make money both in terms of shorting the markets and reinvesting into the S&P 500. In fact, we have been able to trade this entire drop down so far, or the majority of the drop so far, and we actually timed the top of the markets almost to perfection with a beautiful sell signal to take us all the way down to our selected targets. Now on this chart you can look, this is the monthly chart, so every candle is a month, and you can see we have the bull market that we've seen throughout the past 11 years or so. The same bull market that until recently people have been saying it will go on forever. People were starting to come out with theories that this was a secular bull market that would maybe last 20, 30 years. Well, unfortunately, this is not the case. As we all know, that does not happen, and it has come to an end as it was suspected. We had been looking at this wedge pattern that was developing since January 2018, and I've always said this looked like a huge topping pattern to me. We had divergence on the monthly chart, you can see right here. When you get this kind of divergence on the monthly chart where the RSI starts to go down and the price starts to continue climbing, that's not very good news for the bullish case. We had many warning signs, and the virus isn't the sole cause to this drop. We had been looking for an end to the bull market for a while. Now, don't get me wrong, the virus definitely has had a huge impact on this drop, and that is definitely something I'm going to cover in this video. But what I'm trying to get at is that this pattern has been forming for a while, and we simply needed a catalyst right here at the top of the wedge to begin the correction down. Now, again, going back to this bull market, I like to represent this bull market with a trend line, a simple trend line. If we are above the trend line, we are in the bull market. We can bounce off of the trend line. We are in a growth, and the S&P 500 is rising in price. So this is the bull market. Once you start breaking this trend line that represents the bull market, well, you are in what can be considered a bear market. So for me, at least, we are officially in a bear market if we can close the week below this trend line. This is the monthly chart, so we're going to take a look at the weekly chart right now. If we do get that weekly close below the trend line, that would be our longer term sell signal, and that would mean I will have a bearish bias in the markets in the coming months. It does seem like this is the most likely scenario right now. The S&P 500 seems to be poised to close below this trend line, which is definitely a technically significant event. And so I will be starting to accumulate some longer term short positions to try and trade the S&P 500 down to lower support levels like this one. And the 2015 support level right here, and in probably the worst case scenario, this support level. But I do have one last target in case we have a global crisis on our hands, and that would be the top of the 2008 crisis. Now make sure to like and subscribe if you haven't already. I really want to show as many people as possible this video and really try and promote a calm and rational approach to this entire mess that we have. And we really are going to try and profit the entire way down and try and time the bottom as best as we can and try and make money on the way up, reinvesting into the S&P 500 and really getting a good price on it. Now, in terms of the corona virus, the economic impacts of the virus have been much greater than expected. I mean, entire countries are going on lockdown to try and prevent the virus from spreading too quickly. Hospitals are being surpassed by patients. I know for a fact that Italy is starting to refuse patients because they just can't handle the sheer amount of patients. So really, I think there's going to be a global effort to try and slow down the transmission of the virus. And so this has and will continue to halt completely economic activities and is likely to impact everything, every sector, in one way or another, including crude oil, which has dropped tremendously recently, which the US is actually a primary producer of. So this definitely will have an impact, more of an impact on the US economy just for that simple reason. So in terms of time frame, I really suspect the coronavirus pandemic is likely to continue for at least a few months and definitely start dragging us into potentially a more prolonged bear market, dragging definitely us into 2021. I do think the huge drops in price we've seen in the past couple of weeks will start to uh, wane down as we approach this support level, and will likely have a few stops along the way, a few counter rallies before we get to these two support levels. And again, I do want to clarify something in that these are huge investment opportunities for us, and I will be starting to take larger positions into the markets from these support levels to definitely average down my positions in the markets. So if you have cash to spare, definitely wait and see what is going to happen. This will offer many, many opportunities for traders like you and I to invest in the long term into the US economy. And I assure you, the markets will end up turning back around, even if it seems like the end of the world. And I can assure you that it will seem like the end of the world as we prolong into this bear market, into this virus outbreak. But they will end up turning back around, just like when they fall, just like they always fall. Even when it seems like they will go up forever, they always end up falling at one point or another. And from a technical analysis standpoint, end of bear markets are actually fairly easy to time. We can go back to 2008. On the weekly chart, you can see we had clear divergence here. The price was going down steeply while the RSI was going up on oversold levels. This is clear buy signal, and definitely fueled the initial rally to start this bull market. And we can go back to the 2000 .com bubble, and you can see we have a very similar pattern here, where we have divergence. The price continues on down. The RSI starts to climb back up, and that fuels a nice rally to start a nice bull market. And you also tend to have clear MACD crossovers, as you can see, a much less whipsaw signal than the end of a bull market. You'll have one clean MACD crossover that will fuel a nice rally. Same thing here. We did have a couple whipsaws, but the initial MACD crossover with the divergence, so you have the crossover with the divergence that will spark a rally at the end of a bear market. So that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.